There's a graveyard in every trading pit. Not a real one, though sometimes it feels real enough, but a graveyard nonetheless. It's filled with traders who had talent, discipline, intelligence, everything you'd think a successful trader would need. And yet, they're gone, blown up, walked away, never made it past year 2 or 3, and almost every single one of them died the same way. Not from a single catastrophic loss, not from a market crash that nobody saw coming. They died from 1,000 small deaths, from the constant, relentless, never-ending need to change, to tweak, to try something new, to abandon the thing that was working, or even the thing that could have worked, the moment it hit a rough patch. They didn't trust the process, and that inability to trust is what killed them. Let me tell you about a man named Collins. Good trader. Smart. He had studied the markets. He understood price action. He had a system that made sense. It was based on sound principles, confluence of support levels, volume patterns, risk-reward ratios that favored him. On paper, it was beautiful. And when he backtested it, it worked. 62% win rate, solid edge. This was the thing that was going to make him money. He started trading it live on a Tuesday morning. By Thursday afternoon, he'd taken 3 losses in a row. Not devastating losses, his risk management kept them small, but 3 in a row nonetheless. And something broke in him. Not his account, his mind. Because suddenly, all of that confidence he'd built, all of that back-testing, all of that study, all of that belief that he'd found something good, it evaporated. And in its place was doubt. Real, crushing, all-consuming doubt. So he did what most traders do in that moment. He changed. He abandoned the confluence system and started looking for something faster. Something that would give him quicker wins to offset the losses. He found a scalping method. Tighter stops, smaller targets, high frequency. On paper, it made sense. More trades, more opportunities to win. He spent the weekend learning it and walked in Monday ready to make up ground. By Wednesday, he'd blown through his account trying to hit scalps in a choppy market that had no edge for a scalper. The tight stops kept getting hit. The small targets never materialized. He was underwater before lunch. But here's the thing. If he had stuck with the original system, if he'd had the patience to let it play out over a real sample size, not just 3 losing trades, he would have made money. The system worked. The math was sound. It just needed time. It needed him to trust that 62% win rate meant something over a large enough number of trades, not that it meant he'd win the next 10 in a row. He couldn't do it, and so he died in the pit. Not spectacularly, just quietly. One strategy change at a time. I've watched this happen hundreds of times, and it always follows the same pattern. A trader develops a system. It could be based on moving averages. It could be based on breakouts. It could be based on the way the market closes relative to the open. The specifics don't matter. What matters is that the trader believes in it enough to start trading it. For a while, it works. Maybe not perfectly. Nothing works perfectly, but well enough. The trader makes some money. Confidence builds. This is the thing. This is it. Then comes the losing streak. 2 losses in a row. 3. 4. Now the trader is starting to question everything. Is the system broken? Did the market change? Did I miss something when I was developing it? And instead of asking the most important question, which is this losing streak within the normal variance of a system that has an edge? They ask a different question. What am I doing wrong? And once you start asking that question, you've already lost. Because now you're not evaluating the system anymore. You're not asking whether it has an edge or whether it works over a large enough sample size. You're just trying to fix the pain. You're trying to make the losing streak stop right now. And that is not a rational decision-making process. That is emotional decision-making wearing a suit of analysis. So the trader starts tweaking. Add a filter here. Remove a condition there. Maybe the stops are too tight. Let me widen them. Maybe the targets are too ambitious. Let me lower them. Maybe I need to trade only during certain hours, or certain days, or when certain indicators line up. Maybe. And with each tweak, something dies inside the system. Because now it's no longer the system that was back-tested and proven. It's a new system, a hybrid. A Frankenstein's monster built in real time by a trader who is desperate to stop losing. And Frankenstein's monsters don't have edges. They have hope. And hope is not a trading strategy. Here's what the professionals understood that the amateurs never do. A good system, a system with a real edge, will have losing streaks. That's not a bug. That's a feature. That's how you know the system is real. Because real systems don't work every single time. They work most of the time, over a large enough sample. But any individual sequence of trades might look ugly. The difference between a trader who makes it and a trader who blows up is not that the successful trader never has losing streaks. It's that the successful trader expects them and planned for them. When I was trading, I knew what my system's maximum consecutive losses looked like historically. I had run the numbers. I knew that over a sample of 500 trades, I might see 6 losses in a row, might see 8. I had seen it in the data. So when it happened live, and it always does happen live, I didn't panic. I didn't question. I didn't change. I just kept trading. Because I knew that after the losing streak would come winning trades. The math said so. The history said so. And the math doesn't lie just because you're feeling bad about your losses. The traders who changed everything every time they got uncomfortable, they never found out if that's true. They never stayed the course long enough to see the other side of the losing streak. They just kept jumping from system to system, never giving any of them a real chance to work. And here's the brutal part. There are a lot of systems that could work. Systems with real edges. Systems that would make money if you just let them work. But they never get that chance. Because the moment they hit resistance, the moment they show you a sequence of losses, you abandon them for the next new thing. And the next new thing is, almost always, worse. Because it's not based on backtesting or study or real analysis. It's based on the desperation of a trader who needs to feel like they're doing something. Who needs a win right now, not a system that works over time. So they jump to something more aggressive, more frequent, more exciting. And more aggressive, more frequent, and more exciting means more losses. Because frequency doesn't create edge. Edge creates edge. And you can't buy edge by trading faster. I knew a trader named Henrik. Brilliant man. Truly brilliant. He developed a system based on market structure and support resistance levels. It worked. Over 2 years of live trading, it made money consistently. 63% win rate. Good risk-reward. Beautiful work. Then came a 6-month period where the market moved sideways. The system was designed for trending markets and it struggled in the chop. For 6 months, it didn't perform as expected. Not because it was broken, but because the market conditions didn't align with what the system was designed for. Henrik couldn't take it. He started adding oscillators to catch the chop. Trend lines. Moving averages. He turned a clean, elegant system into a mess. And the mess didn't work. It had no edge because edge requires focus. You have to know what you're looking for, and you have to look for only that thing. The moment you start adding everything, to try to catch every market condition, you've diluted the thing that made you money. By the time the market returned to trending, which it always does, Henrich had already abandoned his system. He never got to profit from the conditions it was designed for. He just kept jumping, kept tweaking, kept looking for something new. The last I heard, he wasn't trading anymore. So let me ask you something. How many systems have you traded? 1? 5? 10? And for each one, how long did you actually trade it before you decided it wasn't working? A week? A month? Because if it's less than a real sample size, and a real sample size is usually at least 50 to 100 trades, depending on the system, then you've never actually tested whether the system works. You've just traded it long enough to hit a losing streak, panic, and move on to the next thing. That's not trading. That's just expensive learning. And it's learning you're going to keep paying for until you stop doing it. The professionals who lasted, who made real money, who built careers that spanned decades, they had this in common. They got good at something and they stuck with it. They developed a system. They tested it. They knew its stats. And then they had the discipline to trade it even when it was uncomfortable, even when it was losing, even when every instinct told them to try something new. Because they understood something that most traders never figure out. The edge is not in the system itself. The edge is in the consistency of trading the system. In doing the same thing, the same way, over and over and over again, regardless of whether you're winning or losing in the moment. That consistency is what separates the noise from the signal. That consistency is what allows you to gather enough data to see whether you actually have an edge or just a lucky streak. And that consistency, more than anything else, is what makes you money over time. But you have to trust it. You have to believe that the work you did before you started trading was real, that the back testing meant something, that the edge is still there, even if it's not showing up today. And if you can't believe that, you shouldn't be trading that system. You should go back, retest it, study it harder, build more confidence in it. Because the moment you start doubting mid-trade and making changes on the fly, you've lost before you've even started. Every trader I've watched fail did this one thing. They didn't trust the process. They didn't trust the system. They didn't trust themselves enough to stick with something through the rough patch and come out the other side. So when the next losing streak hits, and it will hit, I want you to ask yourself a different question than most traders ask. Don't ask, is this system broken? Ask, did I actually backtest this well enough to know how it performs over a large sample size? And if yes, then am I currently in that normal variance zone, or have I fallen outside it? Because if you're in the normal variance zone, if the losing streak you're experiencing is something the system showed you it could experience in the data, then the answer is not to change. The answer is to keep trading. The answer is to trust the process. Because the traders who trust the process are the ones still standing when the amateurs have all gone home.